I'm here to talk about gold, and it's hard for me to think about gold without picturing Goldmember from Austin Powers saying, I love gold. But when it comes to investing, gold may be the antithesis of artificial intelligence or AI, which has become all the rage. The precious metal has acted as a store of value for thousands of years with zero technological innovation. Keep in mind, gold is discovered, it's not developed. Gold is also a real tangible asset and can act as a potential hedge against inflation or a safe haven during times of crisis. So keeping that in mind and a risk on record-setting equity market, people are wondering what's up with the rally to new highs in gold and how is it keeping up with AI stocks over the last several months. So gold and the equal weight Magnificent 7 index are both up around 20% since March. So spot gold prices traded sideways for several years, and they finally reached record highs back in March. That rally continued into the summer months as expectations for monetary policy pivot from the Federal Reserve firmed up. This was honestly an expected response from gold as lower interest rates and a weaker dollar increased the appeal of gold. Now, before you buy into all these gold commercials or go buy up all the Costco gold coins you can find, keep in mind that back in September of 2011, gold peaked around $1,900 an ounce after a big rally coming out of the great financial crisis. And then the price dropped. It didn't make it back up to that $1,900 an ounce level until July of 2020. That's almost 9 years. So gold's not without risk. Now, a weaker dollar and declining interest rates have helped gold rally, but central banks have increasingly played a supporting role. According to the World Gold Council, global central banks purchased record levels of gold in 2022, followed up by near record level buying in 2023, and they've been buying more this year in 2024. Keep in mind inflation is falling, which could potentially reduce the allure of gold as an inflation hedge. But the direction of interest rates, central bank demand for buying, and the current geopolitical climate tend to have more of an impact on gold than inflation falling. And a lot of that probably is going to offset some of the allure or some of the shine coming off, pun intended, with inflation falling. Long story short, this gold rally probably has a little gas left in the tank. But like stocks, I would not expect the rally over the last 12 months to be indicative of what the next 12 months will look like. Gold can be a part of your overall portfolio, but it is not a replacement for stock or bonds. It's more like a complement. And if you're lucky enough to already be working with me, you probably have some gold in your portfolio you didn't even realize that you had. So hopefully this has been helpful to kind of talk a little bit about what's happened with gold. And if you did find it helpful, be sure to follow along for more content.